All right, what's good, bro, chatas? It's finally here. The strategy is finally here. Thousands of dollars of knowledge I'm about to give you guys for fucking free. Okay, so pay attention, lock in. There's 3 strategies I use. This is the first one, right? Because there's obviously different scenarios in the market. So each strategy is going to have 2 parts, part 1, part 2. PDI, we're starting off with part 1. Next video tomorrow is going to be part 2, okay? So PDI strategy, part 1 explained. Let me move my big ass head out the way. Ooh, not that, let's not do that. Hold on. Boom. All right, cool. So PDI strategy, what is it, right? So it's a pre-distribution inversion strategies, right? So we tried to catch the inversion before the distribution leg. So where does that come from? Well, it comes from the AMD model. Why? Because what do we have? Well, we have accumulation, right? All this blue box. And then what do? We manipulate higher, maybe even into a fair value gap, but we take out all this accumulation zone high. And then what do? Well, then we have an inversion, and we try to enter off the inversion, catching the distribution. Hence, PDI, pre-distribution inversion model. Okay? So, accumulation, manipulation, distribution, and we try to catch an inversion before the distribution. Hence, PDI. Then we can target either all this LRL down here or the sell side, whatever the fuck. So that is the basic rundown of PDI. Pretty simple to understand. It comes from the AMD model. Again, I'll leave the links in all my beginner's blueprint videos in the description. If you guys don't know any concepts such as AMD, we'll get into inversion for value gaps, so on and so forth. I'll leave it in the description, but let's get in on over to our checklist. Okay, so what is the first thing we're looking for when we want to spot our PDI strategy? Well, we want to spot the accumulation zone. So what do we have here? We have an accumulation zone. Okay, what is next? We want for price to manipulate into a key level. So what do we have here? Price manipulated higher, sweeping out all this accumulation zone highs. And then what else did it do? Well, it manipulated into this bearish fair value gap, a key level. Again, if you guys don't know what key levels are, I have an entire video on key levels. I will leave the video in the description. Okay. So spot the accumulation zone and wait for price to manipulate into the key level. What do we have? We have an accumulation zone and price manipulated into a high time frame bearish fair value gap. From there, what are we looking for on this leg up? Well, this leg up, the manipulation move up, we're looking for, if we're looking to take shorts, then we're looking for bearish fair value gaps on the 1 through 5 minute to get inverted and then enter off that. And if we're for bullish, right? If price is going the other way, if price manipulates, oh fuck. Here, let me just draw it out for you. Okay, if price manipulates this way, then we're looking for fair value gaps in this leg right here to possibly enter for longs, right? So then we would be looking for bearish fair value gaps. So we're looking for fair value gaps to get inverse on the manipulation leg up or down, depending on which way we're going, right? Looking to get inverse. What is step 4? Clear, draw on liquidity for take profit. So does price have a reason to go the way we want it to go? Yes, it tapped into this gap. Yes, we have an A and M. We don't have the D yet, but pause. Is there a reason for the D to come? Yo. Anyways, yes, there is. Why? Because we have sell side down here. Maybe we even have another high time unfilled for value gap right here, and we have all this LRL accumulation zone right here. So, yes, boom. We have a clear draw for our take profits. If we have our clear draw, what's next? Well, we're going to enter off the highest time frame, the highest low time frame inversion for value gap. Okay, so if we have a 2-minute for value gap and a 3-minute, we're only worried about the 3-minute. If we have 2 1-minutes and we have a singular 4-minute, we're only worried about the 4-minute, right? So we're taking the highest time frame for value gap in the manipulation leg on the 1 through 5 minute. Okay. So again, manipulation leg, if we have, let's say this is a 1 minute right here and this is a 2 minute. I don't give a fuck about this 1 minute. I'm waiting for this 2 minute to get inverse. Why? Well, because higher time frame holds higher power. Okay. So that being said, let's drop down into our PDI example. So when I am aiming with PDI, or when I'm entering off our PDI strategy, all I'm necessarily looking for, here, let me move my head out the way. Let me make sure I'm not on mute. All I'm necessarily looking for is a 1-to-1 to 1-to-2. Why? Because I have a low RR, right? Which means a 1-to-1, 1-to-2. I'm not aiming for these 1-to-10s, but my win rate is a lot higher. I have about a 71% win rate. And actually on my top step, I have like a 69% win rate now, right? Almost a 6.7. A 69% win rate. And that's because when I first started those accounts, I was taking dumbass trades and just hella emotional. But about a 71 win rate overall, right? So low RR, high win rate is what I shoot for. I'm fine with those $400, $500 days. Those days stack up, right? Especially if you're copy trading accounts, it's a fuck ton of money. So what are we doing? Well, we're in a clear uptrend, right? So what are we, our bias is aligning, right? So if we have an accumulation and we manipulate lower and we're already in a bullish trend, well, then what can we do? Say we come down after our accumulation zone. We then manipulate lower. And what are we manipulating lower into? Here, let me make this blue for you guys. Okay, we have our accumulation and manipulation. What do? We swept past Asian lows, and we just filled a bullish 1 hour for value gap that most likely needed to get filled. From there, what do we get? Let's say this is a 3-minute inversion. Boom. And our higher time frame aligns, right? We're clearly in a uptrend. So what do we want? What do we want to see? Multiple take profits get hit. TP1 is going to be these equal highs, right? TP2 could be London highs, right? Whatever else is above us, sell side or buy side liquidity, whatever. And TP3, unfilled 4-hour bearish for value gap, right? So we can have multiple take profits if our high time frame bias aligns. And you might be asking, well, what if our high time frame bias doesn't align, right? So say we are in a downtrend right here, just overall on the higher time frames, and then we see a slight move up. Well, if we're bearish overall on the higher time frames, but we still see the AMD model, that's completely fine. We can take it. Why? Well, because we have accumulation. Then what do we get? We have a valid manipulation move. And how do we know it's valid? Well, because what does it manipulate into? Asian lows and an unfilled high time frame for value gap. So there's a reason for price to now go higher just a little bit, right? But if our high time frame bias doesn't align, this is going to be our one and only take profit right here, right? We're not going to leave runners just because time wouldn't be with us. So like this right here, I wouldn't worry about if we have an unfilled gap up here. I wouldn't worry about, because if price does continue higher, it could just take this out and then reverse back down. So that is why if our high time frame bias does not align, well, then we can go ahead and just take one take profit and call it a day. Okay. So if our bias does align one more time, well, TP1, break even, TP2, TP3 gets smacked. And our entry point would look something like this, right? Let's say we're going long. Stops at the lows right here. Take profit 1, 2, and 3. And then same thing over here. Here's our distribution leg, right? Same thing over here. Here's our distribution leg. But it's only a miniature distribution. Why? Because on the higher time frames, well, we're going the opposite way. So where is our one and only take profit? Enter off the inversion. Stops at the lows. Oh shit. Stops at the lows. Take profit at the accumulation zone highs. And then if you're obviously bearish, your take profit would be at the accumulation zone lows, right? So moving on over to what we're not going to enter off of. So if our PDI has, let's call this equal lows right here, right? If our PDI has equal lows, especially on the higher time frames, I want to see those lows get swept out first, right? And if price does then continue up, then we can take a continuation model. And again, we'll get into a continuation model in a couple days. But we don't want to enter if there's equal highs or lows at or near our stop loss. Why? Because what do we know about those? That's a key level, and price likes to draw to those before either reversing or we can say continuing a trend, right? So we don't want that near our stop loss. We want to see those get taken out first and then go. If price ends up continuing to rip up and it takes out our only take profit, well then whatever, so be it, right? It was better we stayed out that trade, because most likely if we did enter, price would have probably came down to stop us out. So yeah, that's why we don't want to enter if there's equal highs at or below or above our stop losses, right? And then if we're respecting opposite PD rays, so say we have an accumulation and a manipulation, And then we have a 5-minute gap open up right here. Okay, here, let me delete all this. Say we have a 5-minute gap right here, but it's not getting inversed, right? We have a 1 minute. And let's say, okay, there's a 1 minute, but there's also a 5 minute, but you go ahead and enter off the 1 minute. Well, then price can just respect this 5 minute and either continue lower or possibly continue higher. But you don't want to gamble that. At that point, you're essentially gambling it. So we want to see the opposing PDRAs be getting disrespected before we enter. Hope that makes sense. And then the third thing that we don't want to enter off of, if it happens, is the inversion fair value gap happens too far away from our entry. So let's say the IFEG is right here, right? This blue box. Here, let me zoom in for you guys. Let's say it's this blue box right here. But the closure happens all the way the fuck up here. We don't want to enter off this. Why? Well, because then look at the RR on this trade. This trade is fucking dog shit. Even towards our third take profit, if we were to hold it all the way, it's still 0.78. And our TP1 is 0.3, right? So what do we do in this case? Well, we can either do one of two things. We can set a limit order right here. So when price does retrace back down into the inversion, we get tapped in. Or we just sit out of it, right? If price just continues to rip up without coming down into our limit order, well, then we didn't lose any money, but we didn't make any money, right? We just sat out the trade, and that's perfectly fine. It's perfectly fine. But what do we know about inversions? Again, if you guys watch my inversion fair value gap video, we know that price does like to come down and re-tap the inversion before continuing higher. That happens not every single time, right? Nothing ever happens 100% of the time, because if it did, we would all be rich and we would all be able to spot it. But it happens, I would say, genuinely, a good solid 75 to 85% of the time. Now, I'm not going to say 100% because it doesn't happen 100%. But if we get an inversion hella far away, chances are it's going to come back down and tap this inversion right here, where this fair value gap where price inversed. So if we did that, we can set a limit order right there. So instead of having a RR that is absolute dog shit like this, right? Now we have an RR that is 1,000 times better. Okay, so that's what we can do if the inversion happens way the fuck above. And again, if we set the limit order and our take profits already get hit, we're going to delete that limit order. We're not waiting on it to come back down because, oh shit, let me just delete this real quick. Again, if price does this, well, then our target is already hit, and we don't want to be entering off this, because if price ends up coming down and smacking this, well, then it can just possibly reverse and keep going this way, right? And now we're stopped out and now we're fucked because we're forcing a trade. So in that scenario, we would just set a limit order. Again, if our targets get hit before our limit order gets hit, we're deleting the limit order. If our limit order does get hit, same targets, right? So pretty simple. So before calling it quits for this video, I do want to go over what I mentioned with if we have multiple fair value gaps in the leg, we're only worried about the high time frame ones. So say we get our manipulation right here, or accumulation, and then we get a manipulation lower, right? Say there's our 1 minutes are going to be blue, and then our 3 minute is going to be, I'll make it red, okay? So just pay attention real quick. Say we come down, right? We manipulate into a high time frame PD array, so on and so forth. So now we're expecting a distribution. Well, if we have 2 1 minutes, and let's say 1 3 minute right here, well, then I'm not worried about the 1 minutes, right? Why? Because higher time frame holds higher power. So even though if this 1 minute gets inversed before, I'm not entering. Why? Because, well, there's still a 3 minute that's essentially protecting price from going higher. So what do we want to see first? We want to see that 3 minute get inversed. Because if we enter just off this 1 minute, then price can hit this 3 minute and then continue lower and potentially stop us out. So there's multiple fair value gaps in the leg. I want to see, or let's say there's 2 on the 1 minute and 1 on the 3 minute, right? I want to see this 3 minute get ran through. Now, if it gets ran through, boom, we can enter, especially if it's good RR. Enter something like this, right? Stops at the swing lows. And our take profit to these highs right up here. Now, if it doesn't give you a good RR, like this is 0.71, then you could just move it up to 0.1 and go in for a 1-to-1. Now, what happens if we just have multiple 1 minute or 2 minute for value gaps in the leg? Let's call these 1 minutes, right? well, then we're going to have to wait until all of it gets ran through, okay? Now, if it's way the fuck up here, see, this is, you kind of, there's no such thing as like, well, okay, how do I want to explain this? Because it's all discretionary, right? It's all, and you're going to learn this over screen time, but like, let's say the 1 minute fair value gap is like all the way up here, and this other one's like down here, then yeah, at this point, especially if we get the inversion with speed, like we tap into this fair value gap and instantly invert this 1 minute, then yeah, we don't gotta wait until this one gets fucked all the way up here, right? Because it's already near our target. So we kind of have to be pretty discreet about it. Now, if it's in this general area of price and it's like right here, then we're gonna want to wait for both of them to get ran through. But if, like I said, if it is all the way the fuck up here, then don't worry about it. We can enter off this first one and then potentially find like a spot for a break-even point, especially if you're not that confident. But if we tap into a high time frame PD rate and then start disrespecting bearish PD rate, especially if we're going long instantly, like as soon as, like if we reject this fair value gap instantly and then disrespect, most of the time, about a 75 to 80% of the time, we're going to continue higher. Now, if we end up just chopping around after that, well, just not the best of PA, right? And sometimes that shit happens. We're not going to win every single time. Sometimes this will happen, even though the setup is an A+, it is what it is, right? But so that is essentially what I mean by you want to enter off the highest time frame for value gap in a leg, or if there's multiple fair value gaps in a leg, we want to wait for all of them to get inverse. But we can also use discretionary, like I would say knowledge, use our like, yeah, discretionary knowledge. Like if the other one is all the way the fuck up here and there's only one right here, then yeah, we can go ahead and enter off this one, especially if the RR is good. Now, if it inversed it all the way the fuck up here, we're not going to want to enter off that, right? But another example, if price ended up coming down and we set a limit order right here without this first one getting touched first, then boom. But if this one does get touched first, this limit order is no longer valid, right? So this is what I mean by you kind of have to be pretty discretionary about it. And you guys will learn that over time in the market, especially if you guys really do apply yourself to this PDI model. But with that being said, this is just part one. Part two will be tomorrow. I'm actually going to film it right after this, but it's going to drop tomorrow on the 13th. 8/13. Oh my goodness. So yeah, don't get too like overwhelmed. I wanted to make two parts of this video so you guys don't get overwhelmed. It's pretty simple, right? It comes from the AMD model. Again, if you guys don't know what AMD is, a key level, a fair value gap, an inverse fair value gap, an SMT, because we'll get into SMT's next video. Well then, please go check out all those YouTube videos in my beginner's blueprint. I'll put the links into the description. On top of that, like I said, tomorrow is going to be part two, so we'll go in more depth. I just wanted you guys to get a basic rundown today. Take notes, please take notes, because there is a lot of information coming, especially with the continuation and then the mech model strategy. So that being said, I'm out for today. You guys have a great rest of your day. I appreciate you guys watching. If you guys have any questions, please feel free to comment. Join my free Discord. Link is in the bio. You guys can either DM me on there or DM me on Instagram, TikTok, all my socials at LoeGpa. So I'm out. I'll catch y'all boys tomorrow.